Hi, and welcome to Finextra at Cybos TV. And today we're going to be talking about the Executive Payments Forum. And joining me today are Simon Newstead from RBS, Gareth Lodge from Celent, Ruth Wanderhofer from Citi, and Barry Rhodes from ACI. Thank you very much. Now, before we get into sort of the nitty-gritty of what the Executive Payments Forum talks about, can someone give us a clue about what it actually is? What type of club is it?
Certainly. It's an event that's been run by ACI worldwide for the last few years. And it's essentially a retreat. We're inviting along bankers and people from payment institutions to share knowledge and ideas, and really get an exchange of information and discuss the topics of the day. They've been running for a number of years, and it's not just in the UK, but this year, for example, there's one running in Mumbai as well.
So, and there's a wide participation from UK and Europe and global?
Yes. Yes.
So banks are really striving to better serve their corporate customers, both locally and globally. So what role do standards play in enhancing this bank to corporate relationship?
Maybe I jump on this. Standards are absolutely vital, and we do see at a global level much more momentum working with global clients on defining the customer-to-bank harmonization, which is done in the Global Common Implementation Group of ISO, where we, with a number of other global players, are working with global customers on defining the way they access the banks, and then it's harmonized, so that these customers can actually change banks and have a harmonized implementation with all of them, which is of course very important in today's financial markets, so that you are flexible, but you don't have to re-engineer connectivity every time in a proprietary way. And we do see that much more happening on the customer-to-bank side, whilst of course in Europe we have the single euro payments area built on the same standards framework, the ISO 20022 XML, where we have struggled over many years to get banks aligned on that standards layer, which is still something that we're going to hopefully push forward with the regulation later on in the year, early next year. And of course it would be great if other markets would have a similar interbank standard, so that we wouldn't only have the customer to bank global implementation, but also between the banks we would have much more harmonized standards to make it more efficient at a global scale. So,
I mean, are we seeing the industry moving towards having the standards between banks and corporates at the same level as the bank-to-bank world?
Well, it's happening earlier with corporates and banks, in fact, which is quite interesting. Yes, because customers are driving this together with the banks that are at global level versus the regional game of SEPA, where, of course, in the interbank space, it takes much longer to be fully implemented.
I think if you sort of move beyond the retail payments environment, where SEPA is the early adopter, if you then look on the global stage, as Ruth's already mentioned, what we're increasingly seeing is adoption or signs of adoption in high-value payments. So we know that the ECB, in the context of Target 2, whilst it's not something that features as part of the SEPA agenda, because high-value payments aren't SEPA payments, the ECB are looking at the same standards and are starting to construct a roadmap for the adoption of ISO 20022 for Target 2, not surprisingly, given they're going to be using the same essential standard set for T2S, Target 2 securities. And equally, we know that the Fed in the US is considering ISO 20022. In Japan, they're also looking at the use of the same standards. So it's starting to spread beyond Europe in a retail payment context into the customer bank domain and into the high value payments domain. And it's clearly, in terms of efficiency, the right way to go to have a common underpinning set of technical standards.
How do you think, are we going to have trouble controlling the various schemes that come out of ISO 20022, much like we've lived and breathed over the last 20, 30 years with, on the retail side, with 85, 84, 83. Are we gonna have problems with that level of harmonization, because it is an XML-based format? There are different various things. We've got IPFA, we've got SADC, we've got various groups around the world that are trying to do this. Do we envision a problem there keeping the standards at a standard level?
even if you just look within SEPA, there are so many variations of the SEPA, theoretically identical ISO standard. So if even within that geographic area, yes, of course, as you move across SEPA, move outside SEPA, we need as global banks, we need as suppliers, we need as customers to keep the pressure on to make sure we move and converge, so we're using as identical standards as possible. Otherwise, we've achieved harmonisation in name alone.
Maybe just to add, there are two dimensions, because the retail environment is very different, and actually we have all these variations already in place versus wholesale. So what we do see is that that's why we're driving as Citi with all the other global banks the corporate to bank agenda, because the corporates know exactly what they want. They define it together with us, and that would be one common global implementation driven by customer demand, which is a very specific customer segment. I would say on all other customer segments, primarily SME and retail, we would probably remain with local flavors and variations, which does create an efficiency problem, because the idea, of course, in Europe was to have more cross-border competition for retail and SME, and that's, in my mind, something that we might not see evolve as quickly, because no one is policing the technical implementation.
I mean, yeah, and I think for SMEs, they're going to have trouble with the XML implementation
And that's
anyway.
another layer, absolutely. So the customers themselves, in my view, shouldn't be forced to themselves adopt XML, certainly for SMEs, but also for larger businesses in Europe and even global ones. The adoption of XML is a specific strategy of a business. The smaller ones might not ever want to do it, and the larger ones might do it, but globally. Hence the global CGI approach. So what we are trying to do in the European context is to avoid forcing customers to adopt ISO XML, but rather connect them through multi-banking gateways and, of course, ERP system mapping, which is already in place today.
I wanted to move a little bit into another area of anxiety, which is expected global regulations, and especially regulations coming out of the US and out of Europe, which could differ wildly. Is there room for regulatory arbitrage?
I don't think so. I mean, I think there's realities. Each country wants to control regulation in its own way, but they're all working to broadly the same goals and means. And it's not as simple as it sounds doing regulatory arbitrage. I mean, perhaps if you're an organisation the size of Citi, and Ruth would be able to speak to that much better, but I can't see it happening in a large-scale way. Maybe in small places for individual pieces, but I can't see it happening overall.
I mean, what is true is that we are hoping to see more global regulatory convergence, particularly on the capital liquidity Basel framework, because what we see is that a lot of countries commit to do things, but have in the past done them in a patchy way at different timelines, and some of them haven't even done them. And so the question now is, for a global player, you would like to see convergence and consistent as much as possible, because every country with own specifications that go as deep down as your balance sheet are going to create a sunk cost in a certain way, rather than having one standard. And what we do also see is that, of course, global players have already announced, so did we, that we will be ready for Basel III much earlier than the timetable. So we'll be Basel III by 2012. Many other global banks have said the same. So even though theoretically people talk about late rules in that 2018-19, the reality is, for global players, it is going to happen much earlier. And so there is a certain risk that super equivalence is one of the key themes that we see coming out, where countries want to do more and more specifically. That, of course, will challenge the business model of a global provider, because you will be faced against very different levels of capital and, of course, different timelines on the regime. But we're trying to be as harmonized as possible straight away, so that we can have a dialogue with regulators afterwards.
To wrap this up, I wanted to have a discussion about technology. So, we've talked about standards, we talked about regulation. What role does technology play in the payments world for banks?
Well, I think probably the first thing that we have to look at with technology is actually what's feasible in the time frame of achieving standard harmonization or compliance with the regulations. We're all looking at cost reduction as a primary concern, so looking where we can reuse services, and whether it's high care or low care type payment processing. I think technology will play the biggest role there in providing infrastructure that can be used for multiple types of payments and payment channels, so that it's going to enable the banks and the financial institutions and the other payment providers the ability to be innovative on a budget, trying to meet those customer demands provide for that corporate access capability across the globe or locally in the most efficient, cheapest manner, quite honestly.
So are banks moving away from in-house development and looking at alliances and partnerships when looking at payments innovation?
If you look at some of the new technologies, some of the new customer requirements, we're increasingly, certainly from an RBS perspective, we're seeing customers expecting faster and faster services, more real-time information, more real-time payments. If you look at technology, but if you also look at some of the new entrants to the market, the non-bank providers, partnership possibilities are increasingly the way that many banks are now looking. So it's not necessarily having to do a self-build and try and sort of reconfigure your existing technology stack to take on new technologies. It's thinking, how can I partner with the right provider, and that's really whatever size of bank you might be. So it might be one bank working with another in a kind of a sourcing way, or it could be a bank working with a technology provider, a clearinghouse, one of the sort of small money remittance sort of agencies almost. That there's a number of ways of doing this, but I think the combination of technology, the enhanced customer demand, and the new entrants is a good way of stimulating innovation.
I think what's quite interesting, look at it from almost the outside, is we see some banks who are seeing what the problem is and then going buying the technology to solve that. But equally, there are some people choosing the same technology and saying, well, we're going to solve this, but what else can we do? And it's those kind of banks who are thinking, well, there's so much uncertainty today, let alone tomorrow. We do need a partner. We do need somebody who we can work with, so we've got that flexibility in the future. So instead of looking at that short-termism, which we see so often, they are taking a much longer strategic view. And I think that will really show in a couple of years, those banks who've made that shift.
And maybe just to add from a Citi perspective, we've been obviously partnering with technology companies for many, many years. And how we do it is really identifying what the customer needs and then creating the solutions and finding in the market how to do it in a most efficient way. And what we've done as a sort of next level of evolution also in the FI space is to have much more innovation collaboration. So we've created innovation centers in Europe, Asia and America to really sit down with clients, whether they're corporates or banks, to identify what they need and how we can work together to create a solution, similarly to what we're doing with corporates in the CGI. So it's really taking the customer as the centerpiece and then seeing what's out there. And particularly given the increasing competition from non-bank providers that are as technology providers coming into the payment space, as an example, doesn't actually need to be a threat, because there's the most efficient way is usually to collaborate, because even for them to recreate everything on their own is not going to be as efficient. So I think there's much more dynamics in the system if you see the challenges.
Excellent. Well, I think we're going to wrap it up here because we're short on time. But good luck, all of you, explaining the Payments Forum to the Cyprus audience.
Thank you very much.
Thank you.
you.